Alrighty, folks, did you hear? The bottom is in for commercial real estate. Yes, multifamily down 20%. That's all you get. Office down 40. That's what I heard a couple of people say. And I don't know. So let's talk to a guy that's actually in the mix, the one and only Mr. Jonathan Twomley. How you doing, sir?
I'm doing great, Michael. So is the bottom in? I've been seeing this lately. This is
Yeah.
a common theme in discussions on LinkedIn and the real estate crowd. And people are pointing to evidence like, well, deals that are coming to market are getting multiple offers,
Yeah.
above asking price,
Yeah.
that sort of thing. So therefore the bottom must be in.
Mhm.
And I have to say, I don't think so.
Yeah.
So why are we getting multiple offers on properties and they're selling above asking? Well, a couple of reasons. One is the properties that are getting attention are ones that are fairly priced in this market. And there are
Mm,
so few of them that they're
right.
attracting a lot of bidders, right? Because there is a lot of capital on the sidelines. There are a lot of people who need to do deals, want to do deals,
I
and there
agree.
has been a discount taken. So there are people out there thinking, hey, 20% is a pretty good deal. I'll take it if it's a good asset
Mhm.
and it's fairly priced. So it's just like, even in a down market for single family house, if somebody
Yeah.
comes on the market with a super cheap, like a really beautiful house that's way under market price, you will attract a lot of bidders for
Yeah.
that. And sometimes that's the strategy, right? You underprice it to get a bidding war going, and then psychology takes over and you wind up getting a better price than you
You
would
would
have.
have. Yeah.
So there's just a really small number of properties coming to market. And I think a lot of the properties that are coming to market are still overpriced and they're not selling.
Yeah.
So,
I
yeah,
you know, I've been in a cycle like the one I think's coming, and this is what my thoughts are. And actually, I have a quote from a CEO of RXR Commercial, one of the commercial giants here in a minute. But when I went through this last cycle, and again, for me, it was residential last time. The first houses that came out with a reasonable price that really understood the market changed, they sold,
yeah,
even though we were going to be on a 3-year fall in prices. The first mover won. It was the person that hung out on the sidelines trying to work it out that as time went by, they ultimately got crushed, right? So the first seller, they may have taken a 10% haircut, but the one that tried to just struggle or hide or whatever, in my market, stuff went down 70%. 70.
yeah.
So it pays to be the first mover. And that's what I think is happening now, to your point. A couple of folks realize that there's nothing on the market. Let's take a couple of our assets. Let's let's cap our losses and let's be done. That's what I think's happening.
Yeah, I mean, and listen, I think that, well, certainly in the case of a single family house, you have that kind of overhang of buyers who kept on losing, kept on losing, kept on losing, kept on losing. And
Mhm.
they are, what their psychology is, oh, it's a dip, but then things are going to start going up again. I better buy now. I mean, listen, I was in that position myself. I think I overpaid for my apartment because if I waited another 6 months, I probably would have paid 20% less than I paid for it. Even though I paid,
20. Ouch.
even though I got a big discount off like what it was originally listed at. If I'd waited longer, I could have saved more money,
Mhm.
but my wife was pregnant and she was like, you got to buy a house right this minute. Right.
You can't delay that.
Yeah. She's like, I'm not staying in this rental anymore with the baby. You got to buy a house. So I was
Yeah,
like, but
come
I
on.
was like, honey, no, we got to wait. We got to wait. She's like, no, 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 there's no waiting. So,
Yeah, yeah.
but I think there are people out there who were like, they've been shut out so many times and
Mhm.
there's still so much in that FOMO mindset or the
Yeah,
fear of that they're going to be shut out forever, that the minute they see it weakening, they're like, I gotta act. It's like buy the dip.
yeah.
But so there is that group of people. But I think you're right. There are a lot of people who are just don't act fast enough. They're waiting, and then they get into a situation where then there's going to be too much on the market and nobody can sell, and then you get into
Exactly.
the race
Oh,
to the bottom, right? I
that's
I
coming. That's what I think's coming. The race to
I
the bottom.
yeah, and I think what's going to happen here, in commercial, it's going to involve the debt, right? Now
Always the debt.
the banks are already doing extend and pretend. This is
Sure.
already happening, but they can only do it for so long. And
That's the key. Not
yeah,
everybody gets that. I've been through this. I saw banks extend and pretend a year and then a
yeah,
second year. But it just my market was a train wreck for 5 years.
yeah.
And eventually
Listen,
the bank's like, I'm out.
I think so listen, there's been some stuff published recently about the fact that so there was all this debt that was supposed to mature in 2023, and everybody was expecting all of these properties to come to market in 2023. What happened? Well, they were all extended. And then
Yes,
they
they
said,
were.
okay, it's going to be 2024. Well, that's now it's all so the amount of maturing debt has been growing the last couple of years because of the extend and pretend, right? So, but at
Mhm.
some point the banks are going to say, okay, enough is enough. We've given you 2 extensions already. We want them, we got to have the money back. And
Mhm.
I think what may happen, and this is maybe something that, I mean, listen, I'll be honest, I have not thought about it until this very moment. Um, and it looks like Ken McElroy in our last, segment wasn't thinking about it either. So, everybody now is focused on this supply issue. The next 2 years, we're going to have
Mhm.
the absorption problem, right?
Mhm.
Following on that, and I think this is actually going to look very much like the great financial crisis, because the foreclosure crisis, as you remember, happened after the GFC ended, right?
Yeah. Yeah. It
The
was a
recession, the
wave.
crisis, yeah, the crisis was like 2007 and 2009, but the
Mhm.
foreclosure crisis was in like 2010, 2011,
11,
right?
12. Yeah.
2012, right?
Yeah.
And so what you may see the same thing in commercial real estate where
Mhm.
the the absorption issue is over, right? You've got positive absorption, rents are climbing again,
Mhm.
but you have this wave of maturities coming that have now been built up because
Yeah.
everybody was extended 2 or 3 years on this short-term debt. And now you hit 2026, 2027, the banks are looking at like, okay, absorption is
Yeah. Yeah.
is back, rents are climbing again. Now's the time to get this
To
stuff out
unload.
onto the
Yeah.
market. And then it all comes to the market at the same time,
Ugh, that
right?
would.
And so what you've got is a supply problem
Yeah.
in the
Well,
market, not on the rents, not in the
I
not
think
in the rental demand, but in the
yeah,
supply of
available.
multifamily
Yeah. You know
for
what's
sale.
interesting about that is I've been through that cycle. And what will come out at the other end is assets in really bad shape. Because
Yeah,
what will happen during the extended pretend is the current owner knows they're on a knife's edge and they won't make those capital improvements that they should.
yeah,
Everything will be a band-aid. So, I think you're right. I think it's very easy for banks to see what Ken was talking about. Oh, okay. We extend pretend for a year. Okay, one more year. But then they get to year 3 or 4 and they're like, okay, the market's a little stronger. Other banks are lending. I got to sell this asset. But the asset's no longer a B plus, it's a C plus,
right.
right? Because it's just hasn't been cared for. So it could be a problem.
And that will lead, frankly, to what I saw at the beginning, when I first got in, was some really good opportunities for
For
value
sure.
add, and like real value add, not this
Real
BS
value,
of like,
not
not the
yeah.
BS of like we did 20 units and now it's, oh, we proved the value add, now overpay for it. But I'm
Yeah,
talking about where you have these properties that they've had a lot of deferred maintenance over the last couple of years, but maybe in a
exactly.
good neighborhood, right?
Yeah,
And so now you can come in and be like, all right, we're going to do a real value add. We're going to
yeah,
completely turn this property around in the course of the next 12 to 18 months,
yeah,
re-tenant it, redo all the apartments,
yep.
change its position in the
It's coming.
market, and
I
then
agree.
sell it to a buy and hold investor, right? And
Yeah.
this the whole cycle repeats itself.
No, I think just playing this out in real time, that makes perfect sense to me. What's coming. So let's talk about this. I don't know. Do you know RXR? Apparently, they're a big
Yeah.
commercial giant. Anyways, I think they're out in New York. But anyways, CEO Scott Rechler, he says that the industry is through 4 of the 5 grief cycles. So it went through denial, anger, bargaining, depression. Now they are in acceptance. So I'm curious, when I think acceptance in commercial real estate, that to me means price discovery.
Yeah.
And to date, we've seen transactions down 70%, lending down 46%, and values down 20%. So, what do you think? It seems kind of rosy to think we've already made it to acceptance, but what do you think?
Well, I mean, I think we're getting closer. I think, I
Okay.
think, I think that, I mean, listen, we still have a little bit of this chatter of like the Fed is going to
Yeah, save us.
Is going to lower rates at the end of the year. We didn't talk about the Fed, and I love the way that literally, Powell said it, and then one of the other Fed chairmen yesterday came out. So one of the other Fed
Yep.
governors,
Yeah.
said yesterday the same. It was kind of the same thing. It's like, we haven't beaten inflation yet. We're not going to cut rates yet. Oh, but we're going to cut them at the end of the year. They're like talking out of both sides of their mouth right now.
Mhm.
And frankly, the rate cuts are not going to happen. I don't think they're happening in 2024
If
at
they do,
all.
it's a quarter point.
Yeah,
It's like that's not going to save you.
I'm putting a pin in the ground right now. Like, we are
No,
not,
no cuts.
no cuts in 2024.
I like it.
With the caveat, if they do cut, it'll be at the end of the year, 25 points. That's
Yeah,
it.
December
Right.
kind of post
So,
election.
yeah. And so it's not, so the point here is that no one's going to get saved by this rate cut.
No.
Right? And
No.
the market is not going to come roaring back. I mean, listen, you and I have both been around long enough that we saw this psychology during the great financial crisis too,
Yep.
where so many people were out there in denial about it. It's coming back. It's going to come back just the way it was. It's going to be, I remember talking to one of these guys one of these mortgage originator guys, the guys that became the evil villains for
Big Short people. Yeah.
Yeah. And I remember talking to one of them, and he was like, oh yeah, I know, and this was like in the depths of it when it was horrible. And he was saying, oh man, we did such a great job. We made so much money in subprime mortgages. I think, maybe we'll start another subprime mortgage company soon. Right. It's just completely like in denial about like the reality. And I think you see this every time, where everybody is denying how bad it is. And they just can't accept the truth. So I don't think that we're in acceptance. Yeah, I think there's some acceptance. I think it's happening, but I don't think we're there.
Yeah, I don't think so.
Yeah.
I really don't. I think there's, as long as people have hope or think the Fed's going to bail them out this year, you're not in acceptance. You're in wishful thinking.
Yeah.
Right. Yeah. To me. So it's pretty interesting. And to me, again, how we're going to know when we're in acceptance is you're going to see deal flow. You'll see transactions. You can't have acceptance and have transactions down 70%. That doesn't tie in my head.
Yeah. The market has to start clearing at a lower equilibrium, right there. So you have to start seeing transactions at the new lower prices. And we're not there yet because there's nothing on the market.
Now, buyers and sellers have to agree. Nothing on the market. The stuff that is overpriced. It's really interesting. But again, I think this bears looking at, again, we're talking about the big stuff, folks, but realize this plays for 4 and 8 and 16 units. The same behavior is happening. I think there's a lot of opportunity to get ready for. So,
and like
Jonathan,
you said before, I'm sorry, just before we get that, but just on the point of like those smaller deals, just remember, if you're talking about 5 to 20 units, right? Chances are that's local bank debt. That is personal full recourse debt.
Full recourse.
Those people are going to be the most anxious to get that thing sold, right? And either whatever the loss, if they're going to have some personal recourse, they want to quantify it, minimize it, just sell the asset and figure out what that deficit is and just deal with it, right? But what they're going to be worried about is, oh shoot, if the market keeps on going down, my liability goes up. And I got to sell this thing now. So I think you're going to start seeing that stuff coming to market maybe next year, maybe the end of this year. Depends. But I think that's the stuff. And so if you're in that space, you're going to have some opportunities coming your way. So go start talking to those banks, man.
No, I agree. At the end of the day, I think there's going to be a lot of opportunity. You got to start doing the work, the relationships, know your numbers, know your area. You have to follow Jonathan Twombly on LinkedIn. Jonathan, just your name, right? Jonathan Twombly?
Yeah, just Jonathan Twombly on LinkedIn, and looking forward to connecting with you there.
Awesome, buddy. Thank you so much.
Thank you.